Hello friends, good weekend. How are today? This is the first weekly review for February 2013. Well, last week was, I would say, quite interesting, especially, of course, in the Euro pairs and again the Japanese pairs. At the end of the week on Friday, with the data coming from USA, the market keep pushing higher, and again, as I said, mainly on the Euro pairs and of course the yen pairs again and again. Well, this is for a few weeks now. I've been talking about the extreme. I'll keep talking about that because that's how extreme works. Whenever it reached, sometimes it works immediately, retraces immediately. Sometimes it just goes against, keep going and going, bringing some new fresh money, and then when no one expects, a move comes. During the last week, I just want to share with you, I've got some, well, I have traders friends from well, all around the world actually. I've got emails from everywhere, options traders and everything told me, Vlad, you're crazy, how can you think that? And I laugh because I'll show you in a minute on the chart. That's exactly what happened to me in 2007, 2008, and exactly what happened to me again on 2009. Let me share with you before I start talk about my predictions for the upcoming week. On 2007, I was talking about everything, whatever you want, Euro, Pound, Aussie, mainly indices, and I said to all my friends then, I was still working for a company, broker company, and while we were here, you see that, right? While we were here, that was the another push up, right, from here to here. Just let me make it a line without array, right? From here to here, which broke the divergence, all the divergence that was here. You see that? Sorry, that's not the line. Here, it was a channel breaking up, right? It was a channel breaking. Right after the break, it created a new high, right? And another divergence on the RSI, and the histogram created new high, higher than the previous highs, but comparing to the first one, still very, very bearish. And right from here, I said, guys, be ready for the euro huge crash. Well, from here, of course, it never happened. It kept pushing higher. It pushed higher for something like 600-700 pips here before it retraced all the way down, and then it pushed all the way to all-time high for the euro around 160, a bit higher. And during all this process, I was saying all this rise is a bluff. Of course, I missed that. And of course, all the people that were inside, all the traders that were inside, trading the trend, were correct. And I was mistaken here, and I was sitting on a very big trade here, and just hold it. And it took, if I remember correct, something like 6 or 7 months. Let's see, actually, from this area right to here. Yes, it's six months exactly until it created the high and started to correct itself. And I was keeping saying the euro is going down, and it's going back to 135, maybe even lower. Of course, everybody laughed at me, said, Vlad, keep holding your minus, blah blah blah. The history, we all remember. It crashed all the way down. And it was everywhere. Pound dollar, same story. It was Aussie dollar, same story. Here, right? Here we go. And of course, it was the indices and everything else. Now, why I tell you that? Because I think the euro dollar now is making exactly the same. It's bluffing. Now, I'll tell, of course, more and why, but that's my opinion. And then as I told you before, it reminds me 2009. On 2009, it happened again, right from the 142 level, right from here. When we got the divergence on the first time, I said, go and short. It was a beautiful resistance, go and short. In this time, my expectation was for that to go back to 137, 136 as for the first target. Then I thought 130, but it keeps going, and from 142, of course, it rises back to 150. Another 800 pips that I was wrong at the beginning. But, and here is the big but, and read my lips and remember my words. Whenever divergence comes, there is a reason for that. And whenever it comes, something is happening on the market. In this case, it started with a weekly chart, right here, right? It started with a weekly chart, right here, from these two highs, right? And it keeps going on the weekly chart, and then we all remember what happened. Euro created very, very low price comparing to more than 6 years on this time. More than, sorry, three years on the same time. So what I try to say, the euro from my point of view right now is bluffing. I've been talking about it for several weeks, about that and about the yen pairs, which I'll show in a minute, and my opinion does not change. There is a weekly divergence on the euro dollar. It started right here. You see that? Let me show that. Okay, it started right here from this, okay, this area. Now, yes, it bounced to the 20 MA almost. It bounced to, we can count this bounce, and now continuing higher. Now, this high is very risky. For a while, I've been talking about 137, maybe a bit higher. 137 was reached during Friday and retraced all the way down and closed on 136.40 or so. The question is, what's next from here? Could we still play around, go higher for the next several months? Well, yes. But as I said, around 137, a high is creating. It doesn't mean it's going to stop on 137. It means from here up to maybe 140, maybe even 143, 144, maybe. The high is created. The weakness is created. And right after that, whenever it's ready, from my point of view, the euro dollar is going down back for, if it's going right now from 137 back to 5, 6, maybe 700 points, if it keeps pushing to 140, 143, I would not be surprised if we will get something like 1,000 or maybe even 1,500 pips down move for the euro dollar. Check out the monthly chart. On a monthly chart, right there, if you pay attention, right from this high, it's forming a bearish hidden divergence. It's not on the MACD though. It's forming on a stochastic. Right? Last time it happened, it formed on the MACD only, not stochastic. And most important thing, that previous months finished as a Marubozu for the monthly chart for the euro dollar. And that's why, and we are moving here inside the flat price, which is going to stay from my point of view. And that's why exactly I think, right from here 137 up to 140, maybe even 142, 143, it's creating a high. Now let's go for the daily chart, and this daily chart is exactly like this weekly chart I showed you. It started right here and pushed higher, and that's exactly divergence, of course. That's exactly what's happening again. You see that? A divergence started here. And that's exactly where, from my point of view, it all begins. Every push higher right now, well, first of all, it continues the divergence from the very first high. It continues the divergence, yet, which means the weakness is there. RSI is aiming its extreme 80 level, and we know what's coming after some time when RSI is coming to its extreme and divergence is forming. Well, so from my point of view, once again, whenever it's happening, MACD turns down and we have clear bearish candle, it could happen 137, it could be higher around 140. Whenever it's ready, whenever it's happened, we are about to start moving down. The first level would be, of course, the visit of this divergence area, which will be 134. Whenever it breaks it down, that's exactly what, from my point of view, will open the doors for the euro dollar, push all the way down to 130, maybe even 125, or who knows, 120 again. This is my opinion. And for the last thing, as you know, from time to time I measure things by average true range channel, and if you pay attention, well, first of all, there are several resistances here, right, during divergence. We are now dancing on the top of 80R channel. You can use envelopes if you would like. We are now dancing on the top, and it means we are creating a top. So, to make long story short, and it's definitely a long story, and I'm sorry for that, euro dollar within several weeks, most likely. Maybe it will take more. Maybe it will take 2 or 3 months, and that's okay. It is creating a top right now, and get ready because it's coming to the end. And fundamentally, as I explained on the previous week, euro dollar rise up is dangerous. On the last months, doesn't matter what you hear to, what you listen to, everywhere they're talking about the eurozone recovery, and I wonder, really? You know what? Let's say, all right, there is a recovery, and let's forget about the unemployment rate and everything. How can a country, or in this case, zone, survive when their currency is so strong? How? It's impossible. That's exactly why Bernanke intervened. That's exactly why Abe and Japan intervene right now. That's exactly why the Swiss bank did that, and the British bank did that, and the Danish bank, and I can go on and go on. It doesn't have to stop. Welcome to the world war of currencies. Euro is still behind. My bet, they will join, and they will join everyone else. They will cut the interest rate, or they will start purchasing more and print more money. That's, from my point of view, the only way for them to stay in the game. If they do not do that, and the euro keeps going on, keeps going higher, then the recession and the bubble around euro will explode one more time. One more time. Just think about it. All the countries have to return euros. They got the loans when the euro was weak. They have to return euros when the euro is expensive. Hello? I'm not some I'm not some professor or I don't know what scientist about economy. No, I'm talking simple things, and that's exactly why all the things together, from my point of view, come together right now. Of course, I might be mistaken. For all the traders that hold the euro and say it's going to 140, 145, I might accept that. I will just not buy when the conditions say sell. That's all. Of course, sometimes it keeps going and going and going. I showed you. It happened in 2007 and 8. It happened in 2009 again. And that's okay. Right? That's because I know that things that come right after that, they're much bigger. And this is the only reason why I'm able and why I'm ready to hold things when they work against me. So, prepared for the sell the euro dollar. And of course, now it will be shorter, all other euro pairs. This is euro pound, creating Bollinger Band duplication. Euro pound, from my point of view, is reaching also very stiff area. First of all, there is 087, historical resistance. A bit higher, we can find 088. which is the gap close right here. There is a trend line. If you pay attention, there is a channel, something like that. It's difficult to measure it exactly, right? There is a channel here. We are going up to the channel. Weekly is creating extreme divergence, completely new high of the MACD compared to the last 5 highs, 1, 2, 3, 4, 5, 6, and 7 here, right? And RSI is creating 80, or coming close to 80. Last time it happened was here, on 2008. We all remember what happened right after that, right? So from my point of view, Euro Pound is creating a high. Yes, it still could play around. But right after that, I think we're going back for something like, well, I would say from 87 in between 200 points as a first retrace, and I would bet even for something like 500-600 points, which will be around 8-10% down move for the Euro Pound. And if we take a look on a daily chart, it's shown very well. Pay attention to this line, right? You see that? We are there right now, and you see that? That's all. Here we go. That's all the channels, well, approximately, okay? All the channels, all the lines that are being tested right now. So again, I was talking about that on the previous week. I'm on the same opinion right here. If you want to trade this trade, you have to remember it could go against you at the beginning, but the things that are coming right after that will be bigger, and that's exactly. Pay attention to the divergence, double top forming here, or a head and shoulders forming an MACD. RSI that is dancing on the very top, and the Euro Pound within 3-4 days can create 20 candles right on the daily chart. Last time it happened was here. And yes, it played flat, then down, and we all remember what happened right after that. So again, I think right from here, maybe a bit higher, it's creating a clear top, and right from there, all the way down again. This is my opinion for the Euro Pound, and it looks pretty wonderful. Of course, it's relevant for the Euro against the Canadian, which I call the top around 136.50 on the blog. Looking at the charts now, maybe it's a top. Maybe we'll still, before the huge retrace, we will still get one push higher on the daily chart to create a divergence on daily chart. So push to 138, 139 maybe to create a daily divergence, not extreme, but continuing divergence, and then bam, all the way down. So all the euros, I can keep go. Euro Aussie, Euro Kiwi, here we go, that's Euro Aussie. On a weekly chart, I was talking about this head and shoulders. So for months now, maybe even 1 or 2 years, I don't know, very logically that we'll see some attempts to push higher. But for the short run, well, I do see some retrace back to 125 at least. Maybe even it's going to keep going here around this level, something to 120, and then push all the way up. So I definitely on the opinion it's time to get ready to sell euros against whatever you want. The next pairs, of course, still the yen pairs. Now about the yen pairs, I was pretty sure that 120, 124 is the final range. In this case, I was clearly mistaken. But the divergence is still here, the RSI dance is still here, the extreme divergence of the weekly chart is still here, and of course we have the next levels. We have at 127, which is perfect level on the weekly chart. This is by the way, the third important, this is the fourth important weekly resistance. The next will be 130, 131, then we have 134, then we have 138. Could it last up to there? Well, yes. But yes, with all the interventions from Japan, yes. But that's exactly the reason why. Even though, based on monthly chart, I do see it's going higher, I still, in the opinion, should look for sell opportunities and hold the sells if you already have it. I will not be surprised if the euro yen is going all the way down to 115, 117 again, maybe even 110, 112. I would not be surprised at all before it's creating completely new highs. But on the same time, I would prefer to reduce the risk and hedge this position, because for future, after the desired and the expected retrace, I do see next highs being created. So that's my opinion about the yen pairs. I do see the cycle coming. It might happen this week. It might happen in a month. It might begin in a month. And to protect yourself, I do think it's better to hedge. And the only reason to hold the hedge is because on monthly chart there are still places to go higher. That's my opinion about the euro yen, and of course relevant for everything else. Dollar yen had a perfect head and shoulders here. Now it's 900 points from here, and after the break it's 900 points, even more. It's extreme divergence, RSI on the very top. I was talking about 94 as a potential level for the trace, but 92 was also very important level here right now. So again, it could happen any time. Tomorrow, I mean, of course, the beginning of the week, in a week from now, in a month from now, I do see a retrace back to 85, 87 range, maybe 88. Then if it makes the break there, I do see a retrace down to 83 before the long continuation up. So it's relevant for every yen pair. I do think it's in this case, in this market condition, of course, it's worth to hold both buy and sell. Enjoy the cycle of the down whenever it comes, and hold the buys and enjoy the swap for a very long run. Of course, it's relevant for the pound yen, which I would not be surprised if it will go to 150 once again, even though it keeps dancing on a very top for the RSI. Maybe it will keep the 150 just to hold the divergence and then make a crash. Maybe it will start a correction right here, down to 138, 137, maybe even lower. But for long run, I do see next highs, and comparing to the monthly chart after the retrace, I do think it will push higher. And of course, I can keep going on and on. It's relevant for everywhere: Swiss yen, Aussie yen, Kiwi yen, CAD yen, whatever you just want. After the cycle, I do see new highs created. Now pay attention for some interesting pairs. New Zealandian pairs. Aussie Kiwi. Aussie Kiwi just breaking through weekly Bollinger Bands. Comparing to that, it could go for duplication. Duplication, which means 121 plus. Will that? Well, most likely yes. 121 plus, maybe even 120. Most likely yes. On a daily chart, it is creating here a Bollinger Band duplication after the first break here, right? It did a retrace, so it's not that relevant. Right here, 200, 200, and so around 122, 30 to 60, we might get a pullback for something like 100 or more points, and that's exactly what I see on the 4-hour chart. I do think it's pushing up, down again, push up again, and then continue to the 121, 120 level, which will then most likely provide buy opportunities. And of course, pound New Zealandian. If you heard my 2013 prediction, one of the things I was talking about was this triangle. If it makes the break below that, it most likely open the doors for something serious. It just broke. How deep it could go, no idea. Right? Just one thing to be careful of, and this is this low, the 186. Maybe we are in front of a false break, and the next week will turn all the way up again. If it's about to happen, then it could be very bullish sign. If not, then let it go, because it might go to 180, maybe even lower. No one knows, before a very long term retrace. And this is the monthly chart. So even if it does create new low, remember the monthly chart. Something bullish huge is about to happen. This situation reminds me actually this on between 2003 2005. Right here is between 2009 to 2012. After this ride, right after the break and the ride down, it retraced for 6,000 points. 6,000 points. I will not be surprised if it's going to happen again. And that's why I say let's see if there will be a real break below 186. Pay attention to that. I think it will worse that. Pound franc. Pound franc, very tricky. After the first push up here, it's right now creating some retrace. Right, this is you can see it on the weekly chart. It's coming to the 33% correction, and that's around 140. Of course, it could push lower, but that's around 140. Compared to the weekly chart, you can see it just broke the Bollinger Band, so it could push lower around 140. Around 140, I think we should look for start to collect the pound franc. But before that, on the short term here, there is a very strong support area, and I'm talking about 140, 170, 142. Maybe for a short run, on the beginning of next week, we will see a stop here, a spike down or something like that, or just a stop in the pattern, and a pullback for 100 or 200 points before new lows could be taken. And this is something I think worth the risk. 140, 170 is very important level. If it holds, that might be the trigger for pullback of 100 or more points up. Pay attention for that. It might happen before the continuation higher. Exactly as if you remember on previous week, right here, I was talking about Aussie dollar bounce from 103.80. If you remember that, that's exactly what happened. I told you it might bounce before continuing lower, and it did, because of the divergence, because of the gap close and this trend line and everything. It did bounce right at the level we were looking for, right? And a very important resistance. No, it never reached the trend line, never, but it did reach the first important resistance, and of course the 20 MA. So that's exactly what I expect could happen for the pound franc as well. And Aussie franc, same story, right? It's breaking through, it's creating a convergence right here. So it might go and right from here, from somewhere here, push up for 100-200 points before it continues lower. So definitely stay tuned for the franc pairs as well. And now for some interesting, just in a few words, indices. Well, I've been talking about the DAX and the Dow and the S&P and even the Nasdaq. They're going up. They might keep going higher, but exactly same story as I talked about the euro dollar at the beginning. Same story with the indices. The divergence is here. The bearish reasons are here. Will it happen immediately? Maybe no. Maybe no. Will it last to merge and then happens, or April and then happen? Maybe. Remember this? Well, for those of you who follow me for a long run, 1 year ago exactly, I was talking about this divergence here. Beginning of the previous year, there was a divergence, and I told you we are going down. We are going down. And when it comes to the previous high, I told you we're going down. And again, it keeps going against me, and right there, when divergence happened, boom, all the way down. Alright? and then again rise, rise, rise against the divergence, and boom, all the way down. And that's exactly what's happening right now. There is a divergence. It keeps pushing. It could keep pushing, but wherever it stops, 14,000 or a new high, new every-time high, and then boom, something huge should come and happen. Weekly chart, just breaking through this line, this RSI line, which normally a bullish sign. And that's why I say, could it push higher? Yes. But if you trade indices right now to join up move against bearish divergence, I think it's not clever. And yes, sometimes I miss good moves because of that, but many times it just saved me, because that's exactly the things and the reasons where bearish moves begin. So Dow Jones, S&P 500, DAX, and the Swiss index, all from my point. This is the S&P, by the way. You see that? More than 20 candles right. Let's go in the past and see what happened after it appeared. 20 candles right, keeps pushing, and then bam, all the way down. 20 candles right, keep pushing, and then bam, all the way down. 20 candles right, boom. 20 candles right, down, boom, up. 20 candles right, and then several booms down. You see that? Right from here, 1, 2, 3, 4. Each of them was something like between 700 to 1,000 points. I can go on. This is 2008. Boom, down, right? 20 candles plus, down, up move, boom, up, 1,000 points. 20 candles right, down, boom, up, and then new low and boom, up. So that's exactly why I think, get ready. Will it happen this week? Never know. Never know. But that's the places, that's the things that tell me, Vlad, the bulls are tired. The bulls are tired. And these bulls, from my point of view, are money boomed bulls. Money boomed bulls. And that's why, as I told you on the previous week, in between 2 weeks to 5 weeks, something bearish will start. 1 week is behind us. 4 left. Time will tell if I will be correct. And I just would like to finish with several stocks to pay attention for a long-term sell opportunity. Berkshire of Warren Buffett, creating a new high, right here, creating a Bollinger Bands almost duplication, so it could push us to 100, 101. Also, there is 20 candles right here, so I expect a down move down to 94.50, or I would even take a bet down to 91, or who knows, maybe new low. This is the first one. The second one will be, of course, related to the banks. That would be Goldman Sachs. Let me just find it. GS. Where are you, GS? Maybe it's not shown. Let me just find that. Here it is, right? This is Goldman Sachs. What? You see the divergence, you see the RSI. Should I say more? I don't think so. Last time it happened was here on 2012. Right? It happened on, it started on January. Keep going all the way until March, and then bam. Will it happen again? No idea. Time will tell. My bet, yes. Weekly chart, we have resistances, with RSI coming to very, very, very important highs. So I'm sorry, but I'm very bearish for the bank. By the way, one of the reasons why merge is very possible for that is because Bernanke is doing a test. pressure test for the banks. Now let's see what will be their results. And the last one I have is JP Morgan, also bank, of course, and same story. Same story. A huge divergence appears here, exactly as on previous year. Huge divergence was there. Then we got another push up for 6 points. 6 points actually, and then drop down all the way again. My bet, history will happen again. Sorry to say that, I'm not bear for always. I'm just bear right now because of these conditions. And for those of you who follow me for long run, you remember there were times when I was mistaken for many weeks, when things went against me for many weeks. But this is my trading. I bet against the direction when I have conditions. I'm ready to hold things when they go against me. But when it happens, I'm there. And I'm going to be in these scenarios as well. Well, thank you very much for watching this video, friends. Just to make a quick summary, we have the euro pairs, which we will follow for the next several weeks, most likely months. And of course we have the indices, we have the yen pairs, we have the franc pairs right now, and we have the New Zealandian pairs to pay attention to. Thank you very much for watching this video. I wish you a wonderful week, and thank you for your time. This was a bit longer this week because I just wanted to explain why I hold my opinion as I hold my opinion, as it is. Thanks once again, yours, Vladimir.